Hey folks, Dan Frio here with your real estate update for December 4th, 2023. Today what we're going to talk about is the economic numbers that came out today. Basically, we're looking at payroll numbers. Came in a little bit better than expected. And when I say better, it's actually better for me and you, but it's not better for the Federal Reserve because the Federal Reserve is going to look at this and say, okay, we still have job growth. So maybe we won't be pivoting on our rates sooner than later. So that's what we're going to talk about briefly, the economic news, what that's doing to mortgage rates. And then I got a special website for you guys out there because yesterday, Kyle Seagraves and myself, we do a live event every Wednesday. And yesterday, many people asked, Dan, what's my market look like? What's Austin, Texas looking like? What's Katy, Texas looking like? What's Chicago looking like? I got a special website for you guys. Don't share this with anybody because you're going to seem smarter than the average bear out there when you find out this website and get the data from it. So it's a little hidden gem that we want to share with you guys today. So without further ado, let's get over to it. So what do we start out each day with is where mortgage rates are. We see an uptick in rates. Well, this shows a little bit down, but today's numbers, we're going to have a little bit of an uptick in rates. So if I haven't gotten back to you today or yesterday with rates, unfortunately, rates might go up just a little bit today. So let's go over the numbers. These are the top 6 products people use when they're buying their first house. Now, the just behind this is, these are not my rates. These are not any individual bank's rates. What these rates are these are rates, average rates by Mortgage News Daily. So let me explain how this works. Mortgage News Daily, they survey lenders all over the country and they ask them these 5 questions, okay? 3 of these 5 are probably you out there watching. So they said, if you have a first-time home buyer looking to buy a primary home as a single-family home, that might be you, but there's more to it. They had a 740 credit score and they're putting 20% down. Is that you? Maybe it's not. So if it's not you, I'm going to give you my information at the end of this video so you can reach out to me so I can help you along this journey. What kind of rate can you qualify with? Well, first off, can you even qualify in today's market? Do you make enough money? Is your credit there? Do you have enough of a down payment? So those are things we would walk you through in a consultation when you reach out to me. So the first thing we want to do is go over why rates are doing what they're doing. So let's get over to it. The economic calendar for today is basically one number coming out today, and it is the ADP jobs report. So this number came in, their last reading was 107,000 or 101,000. They expected to uptick a little bit. It almost went up. Well, it went up about 50% or more. So at 164,000. Now, ADP, sometimes they're spot on, and then other times they are completely off. So I don't think the markets are going to completely overreact to this, but this number right down here, initial jobless claims. Here's where the Federal Reserve is really monitoring. They want more and more people to lose their jobs. And here's the thinking behind it. If people keep spending and spending and spending, if you're on the other side of the equation, you're like, okay, if I can get people to lose their jobs so they can't spend, well, that might cure inflation. Well, that's kind of the thought, a little bit of the thought of the Federal Reserve. So when they start seeing numbers like this, an uptick or in the initial jobless claims or a downtick, they're actually saying, okay, that's not good because more and more people are working or getting new jobs and less people are losing their jobs. So that's basically what the Federal Reserve is looking at. So the first thought is, if this number was from the federal government, the actual unemployment numbers that we're going to get actually on Friday, if this number wasn't an ADP number, you'd probably see the markets completely overreact with this number. So let's get over to the bond market. Let's see what exactly rates are doing right now based on this data. And it's not looking real good for rates. We're probably going to see rates go up about 0.05 today based on this number. So let me explain how this all works. So many times if you reach out and you ask a mortgage person that's been in the business for a long time, you ask them, what do you do to monitor mortgage rates? First thing they're going to say is, well, I watch the 10-year Treasury. Well, that used to be an old signal because you used to take the 10-year Treasury yield. It's 4% right now. You had about 150 basis points to that. It's 1.5%. So you'd be like, okay, rates are on the 30-year mortgages 4.5%. Well, if you look at this, that's how history always had it. But you look at it right now, rate's 6.7%. So much higher than that. So no longer does that correlation work. So what do we really truly watch when we're trying to figure out what's going on with mortgage rates? Right here, the mortgage bond. This bond trades on Wall Street, and it's the yield of this bond is the biggest piece of your mortgage rate. So what we do is we follow right here. This is what's happening to the price of a bond. Okay, all you need to know is when the price goes down, what you're seeing today, rates are going to go up. But if you look at it over the past month, well, let's look over the last 2 months. Look at how this rally is. So you can see why mortgage rates went from 8% right here when that yield was there. The price of this bond went up and up all the way to here. And now rates are 6.6%. So you can see when the price of the bond goes up, yields are coming down. So that's basically the data that we have today. This website that I use is MBS Live. I love it. If you're a mortgage advisor out there, I'd highly suggest you subscribe to it. I don't make any money. I don't even have the link to it down below. So just check out MBS Live, because it also gives you a more in-depth calendar than I go over on my economic calendar right here. This is what I go through each day, and I can see, layoffs. Here's what's going on there. ADP payroll numbers, the exact numbers here, revisions and so forth, and everything else. So that's what I monitor on a daily basis. You can see down through here, ADP payroll numbers. Like I said, it went previously from 100,000 to 164,000. Initial jobless claims went from 218,000 down to 202,000. And then we got continued claims. People continually stay on unemployment. Well, I'm not saying you're wanting to. I'm just saying this is where this number is. It was 1.875 million people previously. It came in at 1.855. So all the employment numbers are looking a little bit better than expected. So that's going to be bad news for the Fed and bad news for anybody out there looking for a mortgage right now, because rates are going to tick up just a little bit. So the next piece of this puzzle I want to show you guys is what websites, what tools do we use to help you guys figure out and help us figure out our analytics behind the scenes, on trying to advise you guys, what's going on with housing prices, what's going on with inventory, what's going on with mortgages and so forth. I'm going to give you a little secret. I've been trying to hide this, but Kyle revealed it yesterday on our live event. Altos Research. Now, this isn't a paid subscription. Just go to it. Also, Altos Research, and you're going to go into the values of homes. And here's the tools, guys. Okay, so scrap a lot of what mainstream media is telling you and what YouTubers are telling you about the housing crash and everything. Do your research on your own. So what I did is, I live in Chicago. So let's see how Chicago's doing. So I go to Altos Research. I put in the zip code for Chicago, and there's 100 of them. And you go in there and you plug that in and you click it, and you're going to get a whole bunch of things. It's going to come up first off this, and then it's going to give you a bunch of tools. It's going to say, let me get my head out of the way so you guys can get a full caption of this. It's going to give you the median prices, median price new listings, and so forth. And if you scroll down, it's going to give you a ton of data. Right now, it's somewhat of a buyer's market. You go down through here. Here's properties with price decreases. All right, those are kind of ticking up, but you can click right through here, and let's just see median listing price. So you can go through here. Where's that crash that we've been hearing about since 2019? Well, house prices were down here at about 150, and they kept there's that crash I guess they were talking about. Well, no, that wasn't it, and so forth. So we are right here. So we're substantially up from where we were just in 2019. One area we get a lot of phone calls is Katy, Texas. So I wrote down the zip code for Katy, Texas, 73301. I'm sorry, Austin, Texas. I think that was that I researched, because I want to see what's Austin doing, because Austin is the stepchild of everybody's data to see, the market's crashing, folks. But when you go to Austin, unfortunately, it's saying right here, there's just no inventory, folks. There's no inventory. So this data is going to provide you a slew of information. So let's pick out some other one. Well, let's go back to the Chicago one just so you get a gist of it. Or let's go to West Virginia. My mom lives in West Virginia. I think her zip code is 26037. Let's look what that is. I think that's what it is. It is Fallsby, West Virginia. Let's see how Fallsby, West Virginia is doing. The average median home is $150,000. Let's see how that fared over the time frame. Well, you started out in 2019. House prices are about $100,000. Where are we right now? It is $150,000. So, I don't see Fallsby, West Virginia getting up to $250,000. I live there. I grew up there. But you can see right through here, the market, gives you all that data and a slew of other information. And you can click through here and it gives you all this data. Okay, all this data. How much is inventory? How much inventory is there? Well, there's really no inventory. Let's look at where we were in 2019. So I know you guys get the gist of it. So Altos Research is the website I want you guys to visit, check out, especially if you're a realtor. This gives you a ton of data on your market, so you can be, when you're talking to your borrowers or your new buyers, you can say, okay, here's the data that I'm providing. Here's the market, how many houses are on the market. Here's the average days earnings or average days on the market, and so forth. So a lot of tools at your disposal that my goal here on this channel, guys, is to teach you, educate you guys on finding out these decisions on your own. I'm here teaching. Think of me as your professor. Okay, I'm going to give you all the tools. I'm going to give you the research. You guys can reach out to me, ask me questions about your markets. What kind of rates are there? What kind of mortgage programs you can fit in with? So how do you find us? Well, unfortunately, I think my website's down. I just went down to the provider. You can go to therateupdate.com, and this is a bad promo for me. Oh, that's back up. You can go to therateupdate.com, and here it is. So there's a couple different ways you can reach out to us. One is the Apply Now button right up through there. It's a little unique. What we do is we don't ask you to put in an application right out of the get-go. You probably don't know what you're doing. You might not know, okay, what income? You're asking me how much income I make. Is that gross? Is that net? Things like that. Can I even qualify? You're going to have some questions for us. So what we do is when you hit the Apply Now button, it's going to ask you a few questions. Based on your answers to those questions, we're going to assign you with a mortgage specialist that actually specializes in exactly what you're looking for. Okay, that's number one. If you want to call, I would love for you to call in or even email me. How do you do that? Well, at the Rate Update, you can find all that information right at the bottom of the screen. You're going to go down through, you're going to see a whole bunch of things like, tell us about yourself, choose your plan, get your loan, find the different products out there. You're going to see mortgage calculators. And then when you go down to the bottom here, you're going to see those two pieces of information that you need. If you want to call us, just give us a call at 844-775-5626, or you can even email me directly. And yes, it's me directly, and I will be the one answering you. And many times I do it in video form. How do you reach me? Right there. So I hope you found a value to my channel today. I'm not a doomsdayer in regards to housing, but I'm not really out there saying everybody should buy a house, because I don't feel that way. It's up to you guys personally. Can you afford it? And it is in your lifestyle adjustments to maybe buy a house in 2024. If that's you, we would love to assist you with that. So without further ado, that's it for today, guys. So if you haven't subscribed to my channel yet, please do down below. Love to have you as a subscriber. And that's it for today. So I can't wait to see you guys tomorrow. Hope you visit me back tomorrow with more news about payroll numbers and where that's taking mortgage rates. God bless. Have a fantastic day. Bye-bye.